Hey everyone, this is Anna Gressel, and you're listening to the AI Drop, your briefing on how AI is reshaping the future of business law and industry. We bring you fresh drops each week so you never miss a beat. Welcome to the podcast. Hello everyone. Today we're going to talk about data centers. Data centers are in the news and headlines every single day. And it's an incredibly important part of the work that we're doing here at Freshfields and many companies are looking at, whether they're investors or energy providers or AI model developers or hyperscalers. It is really top of mind for so many companies these days. And we often get calls that what is happening in the data center space? And frankly, it's moving super quickly. So I wanted to make sure that we captured the snapshot moment in time by bringing in two of our true experts in the data center space. They each come at this from a different perspective and from different geographical regions. So I thought it would be a fun chance to get them together for a little chat. Jessamy Gallaghe is a partner in our energy and infrastructure practice in London and the global head of the firm's energy and real estate group. She spends her time advising investors at the heart of the data center boom, and that includes global pension funds, infrastructure funds, fund managers on M&A and financing issues related to energy, infrastructure, and real estate platforms. And Harry Evans is a partner based in Singapore in our tech, IP, and commercial team. Harry and I work together all the time, and he really focuses on kind of the tech, telecom, and financial services sectors, and he's really close to what's happening in the data center market across Asia and also the AI space. So we have got like a dream team here. And of course, I want to kick us off with a lightning round to start. So Jessamy, Harry, what is the biggest bottleneck on data centers 5 years from now? Let's do a little prediction. Is it going to be power, capital, politics, or something else entirely?
Okay, thanks, Anna. Shall I take this one first? And let's just get the date in our diaries to reconvene 2031 to check this. But I'm going to say power. I think even 5 years out from now, the ability to get access to enough electricity is going to be the key limiter for new data centers. Fundamentally, if you can't plug them in, you can't build them. And certainly in Europe, the grid constraints already really dwarf any funding or political issues. What do you think, Harry?
Yeah, you've sort of stolen my answer, Jessamy. I was going to say that capital and politics are two issues that are being discussed at the moment. And I think that in the short term, they will be major bottlenecks. I'm actually optimistic that the human race will be able to fix the capital and political issues in the sense that they are fundamentally human issues that can be resolved. Whereas there are certain laws of physics which will make it difficult to obtain all the power that is needed to supply data centers in the next 5 years.
It's interesting that you guys are both converging on the same point. You know, in some ways, really strikes at the heart of one of the challenges of AI, which is energy consumption required not only to train models, but also to run inference. And so maybe a whole different episode is on AI and chip architecture and what might enable a lower energy cost infrastructure. But I want to take a step back. For some of our listeners who are not deep in the weeds on data centers, and they're reading about them in the headlines every day as not only kind of a core business opportunity, but as a political flashpoint. One of you maybe can tell us, what is a data center in 2026 and why should folks care about what's going on?
This is a good question, I think, because somebody said to me a couple of weeks ago, why are these deals so interesting? Isn't it literally just like a shed in a field? I mean, okay, yes, there is an element where we're talking about some kind of structure with some kind of hardware in there, servers, but Harry, interested in your views, but I mean, the way I think of it, and I think it's helpful maybe to bring it to life, it's basically the invisible backbone of the entire digital world that you've got in that shed. So they're now powering everything from whether you're streaming movies or whether you're training your AI model, it's happening in that shed. So if you're outside the industry, then you should care. First of all, it's consuming huge amounts of resources. I think it's something like at least 2% of global electricity is now going into data centers. And so it's right at the intersection of energy, what's driving the economy, technology. It's completely reshaping how we live and how we business.
Yeah, I think it's really interesting because data centers as a sort of item of infrastructure are nothing new. they've been around for almost 30 years when specialized developers and operators starting setting up purpose-built data centers and providing services from them to customers. And really, if you go back before that period, most corporations or people relied on on-premise servers. So they really had their own physical computers and they managed those. And with the birth of the data center 20 or 30 years ago, it gave corporates the ability to move all of that equipment off premises into a third party warehouse, essentially. And that gave them the ability to scale and to allow other professional operators to run them. And ever since then, it's really been an industry which has continued to grow. And now we're, I guess, seeing the industry being turbocharged. One thing that I find interesting in Asia is actually seeing some of the regions that have massively built out their data center infrastructure. I think it's fair to say, without being too harsh, that none of them are going to win architectural design awards for building of the year because they are quite blocky. And there are certain parts, usually in the outskirts of cities, where you can see large square blocks for as far as the eye can see, which really are the new, or indeed I say the infrastructure powering the internet. And I guess the point that you made, Anna, why should people be interested? If you enjoy using the internet and using applications on your phone, you need to have data centers somewhere to power all of that. That's just how the internet runs.
Can I just pick up really quickly on one point Harry made? Because it's actually really interesting. This point about the data centers not being very appealing visually and they're just kind of these blocky sheds. I thought it was so interesting at London Tech Week last week, actually, as part of the government's tech policy, it's looking at sponsoring some design awards for data centers, which I think is just like really interesting in terms of a recognition of how entrenched they are now in the fabric of what our society is going to look like and how our cities are. And so we should be really thinking about how do we make these look a little bit more appealing. And of course, that comes into some of the community engagement around data centers as well, which I'm sure we'll touch on.
One side of this is really around the demand story. I think we hear a lot about AI driving data center demand. There are no two ways around that. But Harry, you just mentioned like even your phone, anything you stream, all of that runs on data centers. So yes, AI feels like a big piece of this, but there's so much more under the surface in terms of how our technology landscape is evolving. What is your view on the contribution of AI to data center demand versus just the changing the fabric of society to a more digitally oriented and digitally enabled space?
Yeah, it's a great question. So I've been working with data centers for about 15 years on and off. And I think sort of if you go back 10 years, we've seen a continuous and steady increase for demand of data center infrastructure. And it really started when a lot of corporates started moving their tech infrastructure into the cloud. So I think big banks, big government bodies and the like, who thought that they could run their technology more efficiently via a third-party data center site. And really for about 10 years leading up to the pandemic, we probably saw growth in capacity requirements of around 20% per year. And for those of us in the sector, it was a kind of continuous and fairly steady upwards trajectory. That changed in COVID when essentially corporates and individuals really had to start living their life digitally. So we saw a massive uptake in digital economy services and a lot of businesses moving their platforms onto the cloud, not just for sort of internal purposes, but also as customer facing kind of websites and platforms, which led again to a massive uptick of what we call software as a service, which are technical or digital services hosted in the cloud. And then it's only really been in the last 3 years that since the release of ChatGPT at the end of 2022 that the sector has really been turbocharged. I said before that we saw growth rates at around 20% per annum. Now it's up to about 30 or 40% per annum. So you could say that AI has almost doubled the growth rate and the demand for capacity.
That's super interesting. And, the scale of these data centers is quite incredible. We're talking about gigawatt campuses. Jessamy, let's talk a little bit about like the capital side of the story. Can you tell us, and particularly folks who aren't on the financing side, how much capital is really required to make the dream of the data center realized? But also, what is changing in terms of how these data centers are being funded in practice?
Yeah, it converges really well with Harry's articulation, I guess, of what's happening on the demand side and the timing of that. Because I think what's really happened is that explosion of the need for data center capacity with the release of Chat GPT has coincided with, as ever, capital looking for a place to flow or a new home. And there has been that real shift on the capital side or the investor side. I think probably going back to that pre-Chat GPT time, we had the era where data centers were really more of a real estate play and were sort of relatively niche in terms of their appeal to investors. Whereas in that relatively short period of time, they've very much become part of the furniture of being core infrastructure. They've got these stable long-term cash flows thanks to the hyperscaler contracts that give them the same kinds of characteristics as the much more sort of traditional, if you like, infrastructure assets that this whole investor group used to focus on. And that has meant, as was alluded to before, we're seeing the infra funds, the pension funds, the sovereign wealth funds, all these sources of private capital who are now getting comfortable writing much larger checks around all of this. And again, that coincides with the hyperscalers wanting this sort of increased capacity in these huge campuses. So we are seeing this as an asset class that is very much being looked at as an essential asset. And it's giving this global capital somewhere to go, some place to get into this kind of high-tech infrastructure, an expansion of the digital infrastructure landscape, if you like. And that's just really lit a fuse on it. We can come on to some of the financing technologies that are fueling that, because it really does get quite interesting as we see in a relatively short period of time, the bank-led debt financing. There has been so much of it put in place that there's been a need to really look at other financing sources, whether it's private credit or the capital markets themselves, and we can dig into that as well.
Can you tell us a little bit about what you're seeing in the financing space and what is really kind of novel on the ground these days?
Yeah, thanks, Hannah. I mean, I would say that the best way of thinking about it is that the financing toolkit has just very rapidly expanded. So we started off with pretty much equity and fairly standard bank loans to fund all of this. What we're now seeing is a mix of different products, especially on the debt financing side. So we're seeing some project financing being used for individual sites. That's, really just applying kind of old school project finance, but to this very new asset class of AI. So known financing products, but being used in a different way. We're seeing the private credit funds who are willing to back construction debt, which is interesting. I think that's a new development for them and really reflective of their increased risk appetite and also their enthusiasm to get involved in this asset class. But I think probably the most interesting of all of these is the rise of what we call ABS. So that's asset-backed securitization structures and applying those to data centers. So for those who've been around long enough, the last time we really saw ABS in a big way was leading into the global financial crisis in 2007, 2008. So I'm not going to draw any conclusions, but I'm just going to put it out there to say that there was a lot of ABS being used in the infrastructure sector then, and we're really seeing it back in a big way. And the reason it works really well for data centers is because of this availability of stable cash flows. So an ABS structure, for those who don't spend their days in the capital markets, ABS really means you bundle cash flows. And in the case of data centers, that's the long-term data center leases. So the hyperscaler contracts, which tend to be for quite long periods of time. You package them all up and you turn them into tradable bonds. And what that means in practice is that a data center operator can refinance their sites by packaging the rental income into these bonds, and institutional investors then buy the bonds. It's a really important development because what it does is unlock a much larger pool of capital at potentially a lower cost. So if you think of the kinds of investors we're talking about here, it's investors like insurance companies and pension funds. So they may not be willing to invest in something like a single data center directly. That's not what they do, but they will buy a bond that's backed by dozens of these data centers. And I think as data centers mature as an asset class, we are going to see more of this. And we're going to see ABS structures being used to recycle capital and fuel further growth. It is very new. I think in the US, it's been more prevalent because we've seen the data center build has been moving more quickly for longer and at a bigger scale there. In the UK and Europe, I think we've now seen about 4 ABS structures put into place, but we're talking about them all the time. So it's very much kind of watch this space. There will be more of these. And I think it's a really interesting development, seeing some of these kind of very known financing techniques being applied in new and different ways as the opportunity evolves.
It's so interesting to hear you talk about that because in some ways it seems like the story of the ABS is one really of that stable cash flow. And yet we know that there's a lot of instability and constraints in terms of actually getting these data centers built and up and running. So I'm curious from your perspectives, what kinds of bottlenecks are you seeing right now? Is it different in Europe than in Asia? What is the story on kind of how these data centers actually get built?
Thanks, Anna. It's really interesting here in Asia because I think the sort of build out process has really changed over the last few years. So if you go back to the start of the AI boom, typically developers would be required to build out greenfields data centers in about 24 months. But because of the demand for capacity and the pressure being applied to the industry by customers who really need to bring the demand online, some of those construction timelines have been brought down to 18 or even 12 months, which means that developers are under a huge amount of pressure, not just to stand up their building teams, but also to procure some of the materials and supplies needed to build out their data centers. In this part of the world, partly because of COVID, partly because of geopolitical issues, supply chains have become one of the hottest talking points in terms of the bottleneck. And that could be anything from securing chips to securing fiber and other IT hardware that is needed to stand up the data center. I mean, Jessamy mentioned before the concept of new sort of ABS financing, the importance of customer contracts in terms of delivering secure, reliable, recurring payments for space. One of the big issues with those sorts of agreements is that if a data center can't actually get up and running within the critical milestones which have been set out in that agreement, it's at risk of being terminated. So everyone from developers to financiers to customers are sort of very, very focused on those timescales and the types of issues which could delay them or push them off course.
And I think you guys were both talking about power as the significant gating factor before. It seems to be just this undercurrent that courses through every conversation. And Jessamy, you've written about deals where the power plant and the data center are now financed as a single transaction. Can you talk about this behind the meter generation, sites that run as their own islanded grid? Like, why is that happening?
Yeah, so behind the meter simply means not using the grid. And the reason it's happening is just because of these issues with getting connected to the grid. And, it's great that Harry brought this point out about the timing milestones because, there's this fundamental tension between what customers and operators need to see in order to deliver under the contractual framework and what's actually happening on the ground in terms of the speed at which data centers are being able to be connected to the grid. So that has forced people to think, okay, what are the alternatives to being connected to the grid then? Which has led to this concept of what you might hear being called powered land. So finding some land that you can just get some power onto, and then that's where you build. So that's what's starting to drive build sites. It's this kind of opportunity to find some land that enables this alternative power source, this behind the meter power. And that could be privately owned and operated renewables farms, or it could be gas turbines, or it could be these small nuclear reactors that you hear people talking about. It's just a way of creating power for that data center site that doesn't rely on a grid connection. It's having this effect of turning the data center campus into what you've described as its own power island. But it's really necessary for people to hit these contractual timelines and to keep up with the growth and the demand targets. So it's forcing people to be very creative with the way they approach access to power.
I think just to lead on from that, Jessamy, In the context of crisis that we've seen in the Middle East, some of these sites which have access to power, which is kind of off-grid and is sustainable and continuous, are using it as a real kind of sales pitch or marketing pitch to potential customers and investors, because it's such an important part in terms of the cost of running a data center that if you can insulate yourself from global peaks and in prices, it gives the actual facility a real competitive advantage compared to other facilities.
And when you guys think about taking this global view and looking across jurisdictions, across markets, how different are these barriers and constraints? I would assume it's actually quite different across jurisdictions. And, Harry, maybe we can just turn it to you really quickly for Asia to start. Are you seeing places where land and cost and grid capacity show up really differently from other jurisdictions? And how much are companies pricing that in when they're thinking, for example, about, even tenancy in the data centers?
Yeah, certainly. I mean, Asia is a very diverse region. I think last count, it had about 50 different countries. What we've seen in this market is that countries tend to be classified into tiers, like tier 1 market, tier 2 market, tier 3 market. And those tier classifications are usually linked to perceptions around power security, land access, regulatory permitting requirements, and the like. And so tier 1 markets attract a lot of activity and investment, and they might be countries like Japan or Australia, for example. Even within those tiers, each market has its own story. So if you take Japan, for example, Tokyo has seen a huge amount of investment and activity in the data center space, but there is now an increasing perception that there's not that much land availability left in Tokyo for new projects. We've started to see some court cases where local communities in Tokyo are protesting the development of new data centers because of a perception that a data center will bring down the value of all of the property in the area. So linked to those sorts of issues, some of the relevant departments in Japan, which are responsible for data center build out, are encouraging greenfields developments in other prefectures, such as Hokkaido, where there's more availability of land away from very dense urban populations. Then, I guess as a contrast to Japan, you have places like Malaysia, which post-COVID massively encouraged the build-out of data center infrastructure, particularly in the south of Malaysia in Johor Bahru. I think they approved something like 150 data center projects over a 4-year period. But notwithstanding the fact that they have land, they're now quite concerned about access to utilities such as power and water, not to mention community concerns about the contributions of these DCs to the local economy and to jobs, and whether from a kind of broader social governance perspective, they're a good thing. And as a result of that, they're putting more onerous guardrails in place on issuing new permits for data centers to try to make sure that the build out, I guess, continues in a more targeted and socially responsible way.
And Jessamy, how does this compare to what you see, in Europe and globally?
Yeah, I mean, very similar themes, I think, in terms of there is a lot of community pushback, if I can put it that way, or there's starting to be more active dialogue from communities who are just not that happy about having these data centers necessarily built in their spaces. And I mean, a lot of Europe is very population dense. Obviously, the UK is a good example of that. So you just don't have access across the board to sort of vast rural tracts where you can build out and not be close to communities. So certainly in some parts of Europe, there's a lot of that. If I just touch on Ireland as an example, rural space, but the tension there has really been about the amount of electricity in the country that has been consumed by data centers. So at times there has been a moratorium imposed on further build out because there's this perception that electricity is being so sort of radically diverted to service these centers. I was reading last week, one of the big US private capital houses was talking about this dynamic in the US and about kind of coming up with structures to look at partnering with energy companies and creating 2 buckets of usage and pricing metrics to make sure that local communities were not being overcharged or in a way sort of indirectly penalized for having a data center using up a lot of energy in their space. I think people are starting to think about how they can mitigate that. And then there's a lot of activists who are jumping on board this space. I've heard it said that, the fracking playbook is being dusted off to some extent, with a lot of the sort of thematics from that being used to push back on development. So it's definitely a very live and evolving area. And I think it's, definitely front of mind for people who are looking at greenfields developments as to how those are going to be received and how that could impact on the planning, the permitting, and overall, is it going to contribute to further operational delays? So it's a very real issue.
Yeah, and what's so interesting about that to my mind too is that the political landscape and the policy landscape around data centers is so complex. It's, it is an energy story, it's a natural resources story, it's as you were mentioning earlier, like a community design story and lived experience story, but it's also an IP story. I mean, we see questions all the time about whether IP policies are going to shift in different regions. There are concepts of data embassies in certain countries, of importing laws around IP from, home jurisdictions. It's just the policy playbook is so complex and diverse around these data centers. It's certainly an interesting area to watch. And we're seeing a lot of state level data center bills and, as you were mentioning, moratoria. So it's never a dull day, it seems, in that space. And we've talked a lot about building the data centers and financing them and the landscape around that. Can we just peer into the data center for a moment? Thinking about what's in the data centers, the chips, the GPUs, how do you guys think about that from a value perspective? I mean, we all know that chips are evolving and every kind of chip company has a roadmap. How do you think about valuing a data center when the chip landscape itself is in such flux? And maybe, Jessamy, that's a good one to turn back to you.
Yeah, it's a good question because I think it's good to sort of think about what are some of the risks that are kind of sitting within these data center structures. And it's interesting, particularly, I think, for infrastructure investors coming into this space because they're very used to valuing and financing and thinking about and strategizing around very sort of asset heavy businesses where there are real fixed, socially driven structures like an airport or a port or a toll road or something like that, where you can go and have a look at it, you can see it, you can relatively easily assess what the value is and how much it's going to be used and run a model as to how long it's going to last for and how quickly it would depreciate. It is very different when you're talking about something like a GPU, and we're hearing people talk about this whole concept of, could we be evolving into a GPU as a service model, which is kind of getting to a level of tech that, frankly, I think we still need to think through what does that even mean and what does it mean for investors. But I think, the way I see it is that most private capital investors are not relying on the hardware itself for the value of the asset. There is an acceptance that there is going to be an evolution of the technology around it. So what they're looking at instead is the strength of the contracts and the quality of the rest of the data center infrastructure. And there is an expectation really that you are going to be upgrading servers and you are going to be upgrading or replacing the chips over time. But what you're looking for to underpin the financing, whether it's on the equity or on the debt side, is these customer agreements and feeling comfortable that that data center facility is going to continue to attract demand. So those contracts will continue to provide that cash flow, even if the equipment you're using today is going to be swapped out tomorrow, next week, in 2 years' time or something like that. You want the contracts to be there. So that gives you the cash flows.
This has been an amazing conversation. And I just want to close this out with maybe like the biggest question of them all, which is what is keeping people up at night today? And then thinking ahead to, 18 months from now, what do you think the most pressing issues are going to be on the horizon?
It's a great question, Anna, because I think on the what's keeping people up at night point, I think this whole piece around the matrix of government and regulatory, whether it's sort of on the one hand, what do communities think? And then on the other hand, geopolitics, there is just so much in there. And I think people are sort of watching and waiting to see what government intervention looks like. So, for example, we know in the UK, data centers are now considered to be critical national infrastructure. So there's more scrutiny over the deal doing and probably limits on who can invest. But this is all moving very quickly. So that is going to evolve, and it's something that investors are thinking about because they need to understand how it's going to affect the executability of their deals and also their ability to exit from them at the back end. And then I think operationally, you touched on GPUs and changes in hardware. I think the kind of ability of the cooling technology to keep up with the demand for more and more compute coming out of the racks. I think there is a whole piece there in terms of thinking about what that looks like and what contractual liability for that looks like, which I'm sure a lot of operators have on their sort of top of mind list right now.
That's great. Harry, what's on your biggest issues today, biggest issues in 18 months list?
Thanks, Anna. I agree with Jessamy. I think geopolitical concerns or issues are likely to keep some of our clients awake at night. Here in Asia in particular, we tend to be at the interface between certain regulations in the US and certain regulations in China. In both countries, I guess AI strategy is tied up with national ambition and the like. And so, for example, we're monitoring an act in the US called the Remote Access Security Act, which could potentially impact GPU as a service business models because it would prevent certain data center operators in Southeast Asia from making compute capacity available to their customers in China, which historically has been an acceptable model based on trade controls. And you can see how these sorts of national can have the potential to impact the development of different data center businesses. Looking ahead to the next 18 months, maybe to throw out a Hail Mary, I will be keeping a close eye on the uptake of autonomous vehicles here in Asia and also the uptake of quantum computing. As Jessamy said, a lot of the GPUs that currently fueling the AI boom is sort of premised around traditional computing models. And there is always a possibility that in a not too distant future, they'll all need to be replaced with quantum chips, but we'll see. That's my prediction.
Awesome. Well, thank you guys so much for joining us today on the AI Drop. And it's been a great conversation. And we can't wait to keep watching what happens in this space. It's so dynamic. So thank you for taking the time.
Thanks, Anna. Thanks, Jessamy.
That's today's drop. Thanks for listening. If you'd like to hear more of the AI Drop, hit subscribe and join us each week for fresh insights on what's shaping the future of AI. This podcast is for informational purposes only, and it does not constitute legal advice or establish an attorney-client relationship. It may be considered attorney advertising, so prior results do not guarantee a similar outcome. The views expressed here are those of the speakers and do not necessarily reflect the views of their firms, organizations, or clients. For more information, please visit freshfields.com.